This is our first sort of inaugural Zoom session. We hope to host more of these, and we hope they're helpful for our members. And we'd love for you guys to give us some topic suggestions, and we'll moderate sessions on the topics that could be most useful for our members. So this one will be a little more an introduction to some of the features of the website, but it could be anything from, hey, I want to learn how to, what's going on with this COVID thing and how you think about the, macro economy. We can do a session on that, or we can do a session on, how do I plan my expenses through this time? So really want to invite all of our members to please give us feedback. So you can email us at advisory@bharosaclub.com. That's probably the best way to reach us. Otherwise, you can WhatsApp any of us. I'll share my mobile number with the participants on this call while we're doing the Q&A. And so let me first begin with an introduction to all of you, because most of you will not know me. I'm Sahil Bhargav. I took on the role of CEO at Bharosa in the middle of December. And so you may notice a few changes that are creeping into the website, and I'll give you a quick flavor of what we're trying to do. But before that, I'll walk you a little bit through my background. So I have worked in financial services my entire career. Most of that was on the investing side in the US, where I invested for one of the largest private equity funds in the world called Apollo. And then I worked for a hedge fund where I was investing in public equities, so stocks. And then I moved to India and worked on a NBFC called APAC Financial, helped co-found it, and now have moved on to Bharosa. So what we're really trying to do with Bharosa is we're trying to create a club that is focused squarely on the needs of members and focused squarely on giving unbiased advice to our members. Most of the advisory services that we see in the market have very skewed incentives because they only make money when their members transact. So they'll take a share of your mutual fund return, or they will take a skim on your loan, for example. We don't want to do that. We actually, our revenue strategy is just membership fee. And beyond that, we just want to be, judged on the quality of our advice. That way you can be assured that our advice is aligned with members. So that's essentially what we're trying to do. And central to this is educating our members on, what we're trying to do is demystify finance and make it simple and understandable in a way that anyone can understand it. And with this knowledge, we hope that our members can make better decisions in their lives. But what one of my most strongest requests of all of you on the call, please share what you want the club to do. Because we're at a stage where we can build the club to better serve you. The more you let us know, the more we can take that feedback in. So with that kind of introduction, I'm going to pass it over to Anita, who will walk you through some of the new features that we've kind of maybe overlooked by some members.
So, for us, financial literacy is the most important piece, because if you are financially literate, and these days it has become exceedingly easy to do so, because if you can use Bharosa as a starting point, okay, and then sky's the limit, because with Google and stuff like that, there's a lot you can read on every subject. We cannot stress the importance of doing that, because once you're financially literate, you won't make bad decisions, and it helps you tremendously, because we all spend a lot of time trying to earn more, climb up the corporate ladder, etc. But getting financial literate and making the right financial decisions is very important. So I'm just going to quickly go through certain tabs, not spend too much time on them, because we think they're quite simple and self-explanatory. So the first is the Learn tab. Okay, and under Learn we have Save, Invest, Borrow, Protect, and Retire. Okay, And then we have the act tab, because, you know, one of our favorite sayings is that you cannot learn swimming till you get into the water. So you must act. Okay, if you learn something, act, try with small amounts. That is the biggest learning that you can have for yourself. Okay, when you act, you don't have to get into the deep end of the pool. Like when you learn swimming, you go into the shallow end of the pool, not the deep end of the pool. So try with very small amounts of money, learn, read, and you will be very comfortable, and you know, you'll understand what you're doing. Anyway, so to move on from learn and act, I'm going to first go to the compare tab. Okay, so we think this is one of the most useful tools and functionality that we have on Bharosa. And let me first explain to you the methodology. So what we have is we have our own algorithm, okay? And we run this algorithm once a month, which is the 31st of the month, actually with the 31st data, okay? And we give weightage to based on performance, and we give 50% weightage to 1 month, 1 year, sorry, 30% to 2 years performance, and 20% to 3 years, okay? Now we have used this methodology to rate certain small cases, certain selected diversified equity funds, and stocks. We do not use this, we do not rate debt funds. In stocks also, we don't do fundamental analysis on this screen. You will not see that. Okay, so having explained the methodology, and this gets updated on the 1st of every month, let me take you to the first tab, which is the compare tab. Okay, now in the compare tab, you can pull anything. So let's take comparison of stocks first. So stocks come under the fund house stocks. So I'm going to compare Abbott Labs with another stock, which is, let's take Hindustan Levers. Okay, I could pick a third one, but I'm going to keep it simple and just compare two. Now, when you go down this, you will see that in 1 month, Abbott gave a negative return of 20.45. Hindustan Levers gave a positive return of 68%, you know, and so on. You can just compare these for yourself so that you can make a decision. If you hold these stocks, you can make a decision by comparing it with other stocks on whether you should buy, sell, or hold. Okay. Obviously, if you are buying, you may want to do some more analysis. This is just performance. This is updated daily based on the daily stock prices. And this is just a calculation of the performance. The ratings on the top are ratings that we do based on our algorithm. And those are updated once a month on the 1st.
Yeah, and I just want to jump in a little bit on this. And please don't ignore that last point, because this is looking at past performance and giving you an honest assessment of how is the stock done versus another stock. But as we all know, past performance is no guarantee of future returns. So in no way, shape, or form should you use this tab to be the sole criteria for your decision making. This should help you evaluate and augment your research. Individual stock investing is very complicated, and we're going to have some learning content on that in the future. That's going to be based on my experience investing in individual stocks and how I did that and all that stuff. It'll show you the level of work that professionals go into when making stock buying decisions.
Okay, so the next comparison I'm going to do is with a small case that we ourselves run, which is the Bharosa small case, the Bharosa Club Top 150, and we're going to compare it with Axis Blue Chip. Okay. So Bharosa will show up under Bharosa Stocks Fund, and Axis Blue Chip shows up under Axis Mutual Fund. So now you will see that the Bharosa Top 150 had a negative return in the last month of, and this is annualized, 202%. Axis Blue Chip was 213% negative. 3 months was negative 56. Axis Blue Chip was negative 74%. 6 months, Bharosa was negative 18. Axis Blue Chip was negative 31.9, etc., etc. So you can use this. So this was one small case and one mutual fund. Okay, and I'm now going to compare. So these were all large cap. I'm just going to compare a mid cap. So obviously, you know, it makes sense to compare a mid and small cap with another mid and small cap. So I will compare CanSlimEsk, which is run by Smallcase itself. So I will compare that with Axis Mid Cap Fund. Okay, and you will see that CanSlimEsk is doing a lot, well, Axis Mid Cap Fund went down less than CanSlimEsk did, etc., etc. But over 3 years, CanSlimEsk has given a much better return. So, I mean, you know, I would encourage you to play around with this. In 3 months and 6 months, CanSlimEsk has done better than Axis Mid Cap. Okay, so I'm just here trying to show you the functionality, and you know, you can play around with it whenever you want. Okay, so that is the compare tab. Next, I will take you to the large cap and small case. Okay, now these results are updated on the 1st of every month. So this was updated this morning. Okay, and you can sort these by, so the default sort is by current rank. Okay, but we have here, you know, data of 48 months, because for each of these, we look at 3 months performance. So you will see that Bharosa Top 150, the current rank is 1. But if you want to do the average rank, then Dividend Aristocrats was first. So you can sort it whichever way you want. And use compare, the tab where you choose the drop down, etc., and try and do your own analysis. So here we take, you know, in the pool of large cap equity funds, we have 100 of them, and we have the small cases here too. And in the small cases, we've just chosen the 5 which we think have been performing well. We'd obviously encourage any of our members or anybody to point us to something that is doing even better, and we will happily add that to this list. We're also always watching for this. Similarly, now the next tab is mid and small cap, and you will see that CanSlimEsk has been outperforming, based on our algorithm, has been outperforming all the others, all the other mutual funds in this category, which is the small and mid cap category. Then the third is the tax saver category, in which we've taken, I think, 33 tax saver funds, and we have this analysis based on that. Once again, it's updated on the 1st of every month. In the large cap stocks, we've used the same algorithm to rank and rate large cap stocks.
Okay, and you know, sorry to jump in here. I think this is one of the most powerful uses of this tool, which is in figuring out like-to-like assets and asset classes and portfolios. How has the historical performance been? For example, on the large cap mutual funds, how is my fund done versus other similar large cap funds? That'll help you isolate the quality of the manager, because your fund may be up 20%, right? And you may think, great, that's a very good return. But when you actually benchmark it versus other peers, you may realize that, oh my gosh, you know, this guy is up 30%, you know, and he's consistently beaten this guy by, you know, 5 to 10% every period. So this will help you isolate the quality of the portfolio manager versus just sort of asset class benefit that the fund has received.
Yeah, so we encourage you to use this on a regular basis. It's not just a one-time thing. Come back and see the funds that you're holding, play around with this every once in a while. We think you'll find it very useful, because we do too. Okay, so the next I'm going to take you to WealthSimple. Okay, and in WealthSimple, what we've done is we have taken one debt fund, which is the ICICI Pru savings fund, and one index fund, which is the ICICI Index Sensex Plan Direct Growth. The reason we took both funds from the same fund house is to make switching easy. You can set your equity percentage, and you can just add money or withdraw money by using these tabs. But I want to point you to the backtest tab. So the backtest tab basically is using data from 1st of October 2002. So what we've done in this tab is we've said that if you had bought based on varying percentages from 0, 20, 40, 60, 80, and 100, if you had bought the WealthSimple funds in those different asset proportions of equity to debt, what would your returns have been exactly 10 years later? So for example, if you bought on 1st of October 2002, and 10 years later, which is 1st of October 2012, would your return have been double, 2.5 times, 2.29 times, etc., etc.? And so this data goes right from October 1st, 2002 to March 31st, 2010, because if you bought on March 31st, 2010, and we have the data up till March 31st, 2020. We keep adding to this on a monthly basis. We keep adding 1 month's data on a monthly basis. This is really useful to help you decide what your asset allocation should be. And if you want to follow a very, very simple strategy and a kind of set it and forget it kind of strategy where you don't have to do anything, you just put the money in and there's auto rebalancing that goes on. Our auto rebalancing rules are based on your drift from your target equity percentage. So let's say you said, I want my equity percentage to be 60% equity. And you know, the equity market equity goes up. Now you've become 65. If the Nifty PE is above 26, then automatically some of your equity will be switched into the debt. So you will be selling equity when the equity is high. And similarly, vice versa, we switch if the Nifty PE is below 22 from debt to equity.
And I think spending some time with this tool can be very helpful for our members to get a flavor of the volatility of equity returns. So as you're seeing in the current market, equity prices can move quite a bit if you run into a cycle or economic stress. And playing around with this tab and putting in different start dates, you can get a flavor of what would it mean if I invested at the top of a cycle? What would it mean if I invested at the bottom of a cycle? How does that impact my equity return? How does it impact my debt return? It'll give you an intuitive flavor for the levels of potential outcomes that you could expect with your portfolio. So we really recommend that members spend a bit of time playing around with this, and that'll help you better plan your portfolios to weather volatility.
So on this backtest screen, you'll see at the bottom, if you had just did a buy and hold strategy, what your returns would be and what was the alpha if you actually did rebalancing based on our rules. Okay, so this is WealthSimple for you. Now, WealthSimple is really a set it and forget it, but I'm now going to move on to Smallcase, okay? Because while Smallcase it needs your involvement because rebalancing has to be done with you. You need a demat account, etc., etc. Smallcase has really been, you know, our top recommendation, but we realize that it's not really for everyone because it needs your involvement and not everybody.
Manda, maybe I'll jump in a little bit here, just explaining what Smallcase is and why we're excited about it at Bharosa. So at a very high level, Smallcase is essentially replicating what a mutual fund is doing, right? It's allowing an investor to invest in a basket of securities, stocks in this case, and get the benefits of diversification and active management with a lower potential fee structure. Because suddenly, instead of going through an AMC that's charging and has a high expense ratio, you're going through active managers that are doing this at a lower expense ratio, because they don't have all the compliance and generating statements and all this kind of overhead that an AMC has. So structurally, it can be much more efficient. The counter to that is you don't know the quality of the manager. So when looking at small cases, it's very important that you spend some time understanding the active manager's track record, understanding their quality. But we think it can be over time a very useful tool for members to get similar, if not better, returns than mutual funds at lower expense ratios. That's why we are super excited about small case, and that's why we created our own small case also. So with that, I'll jump it back to my mother.
Okay, so when you click the small case tab, you will see that we have recommended a 3 small case model. Okay, so this is obviously for people who like the small case concept and would like to, we're not encouraging you to put all your money into small case at, in the first shot, but what we are trying to get you to do is try it out with very small amounts, which is the minimum amounts required for each small case. And then if you like it, add more, or you can exit. So you will see in the list of small cases, our in the high risk category, what we are recommending is CanSlim-esque. This is a small case which is managed by Smallcase, the company itself. In the medium risk, we have 3 options. One is Bharosa Top 150. The next is Bharosa Top 150 Lite. And the third is Dividend Aristocrats. Dividend Aristocrats is managed by Smallcase. The difference between Top 150 and Top 150 Lite is the minimum investment amount required. So we had first come up with Bharosa Top 150 Lite, 150, but then because a lot of people could not afford the 5 lakh minimum that was required, or 5.5 lakh minimum, we removed the expensive stocks and included some others which were well performing to make another small case which was more affordable. We're not recommending that you try all of them. We are saying pick one of them, because there's no need to over diversify, and especially when you're trying, just pick one of them, try it out, and then you can read more, you can read the blogs, etc., to see which one you like. All weather investing is a low risk small case, and I think the minimum amount this minimum amount changes on a daily basis, but today was 2,500 rupees or something. So it's a good way to get started. It's a low risk small case, and we encourage you to do that. Below is a report which is updated daily, and we compare our small cases, which is Bharosa Top 150 and Bharosa Top 150 Lite, with the Nifty 100. And we tell you whether we are doing better or worse than the Nifty. And as you can see, we have been doing really well compared to the Nifty 100. And we're very happy about that. And we hope that we can continue to do the same. All our efforts are going into this. And you will see down there that the market peak was 17th of Jan 2020. And there are some comparisons with how we are today as compared to the market peak 1 month ago, 3 months ago, 6 months ago, and since the launch of the small case. Bharosa Top 150 has completed 6 months. Top 150 Lite has not yet completed 6 months, but will do so, I think, 23rd of April or something. So
yeah, and I think the performance, while good has been in a particular market, I think it's going to be interesting to see how we do once things recover. And our hope is that we continue this level of outperformance on the way up as well, in which case our investors should be well positioned. But we're trying. No guarantees of performance.
Okay, so with that, I think we've covered a walkthrough of the site. I'll just point you to one more tab, which is the share tab. We just launched that.
Sorry, Mama, we had a question on the chat, which I think we should address now, from Dvesh. Thank you for the question, Dvesh. For everyone's benefit, if you don't have the chat open, what he asked is the invested money that stays with Bharosa Club, what are the exit clauses? So actually, this is a very insightful question, and it's pointing to one of the key differences with Smallcase. The money you invest with Smallcase never comes to Bharosa Club. It is basically Smallcase. Bharosa Club has a list of stocks and weights. And basically, if you subscribe to our Smallcase, your funds are routed into those stocks without ever coming to Bharosa. So you can exit the Smallcase at your option, at your election. The funds never get routed through Bharosa. Papa, Mama, correct me if I'm wrong, but there are no exit clauses that limit the liquidity of an investor.
Yeah, that's right. What happens really is typically there's a rebalancing email that goes out to the subscribers of the Smallcase. Subscribers may choose to rebalance or not, but if you don't rebalance, then you're taking your own call. And some may want to do that. That's up to them, really.
Yeah. So another question from, sorry, go ahead.
Yeah, just take the other question.
Yeah, so Ashutosh asked, hi Sahil, I guess it will be a bit useful if you can give overview about Smallcase as well. So good question, Ashutosh. So basically, Smallcase, think of it as a mutual fund of sorts. It's a website. It's one of the new fintech companies that started, that's created a platform for people to recommend stocks to private investors. And so let's say that you want to check out the Bharosa Smallcase. What you do is you log into the Smallcase website, you open up a Demat account with Zerodha, and then you log into Smallcase, and you're all set up. And there's a bunch of different publishers. ICICI through AMC is one of the publishers. So this is legitimate website with really big publishers as well as smaller publishers like us, right? And when you subscribe to a Smallcase, what that gives you is the ability to invest alongside our picks. So if we say that our portfolio for our subscribers should look like this, we will list out our stocks and the weights. Smallcase makes it very easy for you to match those picks. So every month you rebalance your portfolio so that your picks exactly mirror Bharosa's portfolio. So your returns track our returns. So that's how it kind of works. It's like a mutual fund. It's a little bit different. If you want more details, feel free to call Anita. She'll walk you through it in more detail.
Okay, so while we wait,
I'm just going to jump in here for a little bit.
Yes.
So Smallcase, works with 7 brokers at this point. They keep trying to add brokers. So you don't have to have Zerodha as your broker. So to use Smallcase, you need to have a brokerage account with some broker which Smallcase supports. And Smallcase is a different company from Zerodha. Also, it's a different company from Bharosa. So Bharosa is just a publisher on Smallcase in there. And Smallcase as such is a research analyst. So they research things and they make their own Smallcases. So they don't have a mutual fund license, but they have a research analyst license.
Okay, so there are a bunch of questions that came in. Karan, your question on why you could not rebalance with DMart. This was a limitation that Smallcase has, that because DMart had only, you could only purchase using limit so therefore you had to go to Zerodha, buy DMart, and then let Smallcase know to include it into your Smallcase. This was a very, very unusual situation, and it was the first time we came across it. It doesn't.
Yeah, and we know it's a hassle, and we'll try and limit the number of stocks that we recommend that have this peculiarity. But DMart has actually performed very well. So I hope you've gone through the effort of actually doing it manually, because it's generated a lot of returns for our investors. So only in highly unusual circumstances where we spot a stock that we think is very underpriced or attractive will we run into situations like that.
Abnash said, at this time of due to the lockdown, I'm unable to open a demat account. At least till April 14th. I've lost the question, 1 second. At least till open April 14th. Should I buy the stocks as per the proportion chosen? You could, but then the issue is when we get the rebalance, we do the rebalance, you won't be rebalancing, etc. I do know someone who opened a Zerodha account today. So Abnash, if you do it completely online, I don't think you'll have a problem opening the account. And it'll take you 2 or 3 days to get the user ID and the password.
Actually,
the brokers, though.
Sorry, the Zerodha is backed up a bit. So Abnash, I've also seen delays as well. They are opening accounts, just taking a little longer. So, but I think, and correct me if I'm wrong, guys, that you can subscribe to the Smallcase to get the stock picks and transact on your own. That's theoretically possible, right?
Yes, yes, yes.
So the answer to your question, Abnash, is yes. It'll be harder for you to keep doing that every month, but you certainly can see our picks and then decide which of those you want to do, which you don't want to do. And sometimes we also have off-cycle rebalances. So last month, because the market was in flux so much, we actually had 2 additional rebalances during the month. So it can become a little cumbersome if you're not on an automated system.
Okay, so Piyush Goyal, he said he's opened a Smallcase Zerodha account, has the Smallcase app, but cannot find Bharosa Club Top 150. Yes, that seems to be everyone's problem. So go to, and we've talked to Smallcase to address this, but until they do, from Bharosa Club, you can click Smallcases tab and click the link to the Smallcase. There's no other solution. And if you struggle with that, just send me a message and I'll help you. I'll send you the link to
Let's just put a link on our website when they click on Smallcase. So
yeah, there is.
Then go through our website. We'll get you there.
So, yeah, but there's one other thing. Sorry. One other thing on Smallcase. There is a thing called Smallcase/creators. So there is a link to various publishers on Smallcase. So what Smallcase has done so far is that if you try and discover Smallcases, it only gives Smallcases that they have created. But they have created a separate area called creators, where it lists Smallcases that have been created by third parties. So there you'll find Bharosa Club as one of the creators. You'll find other creators as well.
Okay, so Navroz, did I understand correctly that one has to open a new demat account with Smallcase? No, you can use an existing demat account as long as it's in one of the brokerage firms that is listed on Smallcase's website. So there's 5paisa, there's ICICI Security.
No, ICICI is not there.
Oh, sorry, ICICI is not there, but I think HDFC is there, Kotak is there, Zerodha is there.
So and the other thing is that one thing important to realize is that you cannot open a demat account with Smallcase because Smallcase is not a broker. Okay, so Smallcase is just a research analyst which provides basket trading. So Smallcase does not have its own brokerage.
Okay, so Karan has said it's one of the very good stocks. Can you add it to your stock list in Bharosa Club? I'm not sure what that means. So we will ignore
the
that.
Compare stocks.
That's a good point.
No, the compare stocks.
In the compare stocks, DMART is not there.
Oh, DMART is not there.
The reason is we don't have 5-year data on DMART because it's a new stock. Avenue Supermarts is a relatively new stock. So our algorithm needs data for at least 43 months. So that is the reason it's not there. But we'll think about whether we can make some tweaks to the algorithm or whatever.
So a couple more questions that I want to address. We're getting quite a few, so I may miss some, and I apologize if we miss some. But the returns on both small cases are different as of today. What is the strategy to track them along similar returns? Great question, Deeksha. So the underlying strategy behind both the funds is the same. The reason the returns are a bit different is we're limited in the stocks we can buy in the light small case, because as my mother was saying, that we limited the stocks basis their share price, so more people could afford the minimum investment. So if you can afford the minimum investment, the top 150 is a better option because it gives us a wider variety of stocks that we can invest in. And if we can pick amongst a bigger universe of stocks, then we should hopefully be able to generate even better returns. So my advice would be, look, on the top 150, if you can afford the minimums, do that. If you can't, do the light. But the other thing I want to just stress to people is that, look, there's a lot of volatility right now, and someone asked about this. Yeah, Deeksha, again, you brought this up. Understand volatility is high nowadays. It is high nowadays. And we sent a note around. I hope you guys had a chance to read it. If not, please read that note. Because what we said in that note is that no one can tell you when the market bottom is going to happen. And if someone claims they can, you should run away from them. Because I've done this professionally for my entire working career, and it is impossible to know how to time the market. So please be measured during this period with volatility, etc. In that note, we also said that we do not think the stock markets are currently pricing in a lot of short-term disruption. And if short-term disruption were to happen, stocks can move a lot lower. So guys, be very measured. Do your own reading and research on whether you think the COVID-19 situation is overblown or underblown, and come to your own conclusions. You know, we will strive to beat the indices and do our best to beat the indices regardless of what the market environment is. And hopefully we'll be able to continue to do that. So I just want to make sure that that point gets home to everyone, that we are in no way saying, hey, go and, you know, everyone put all your money in small case, because, you know, frankly, I think there still may be some room to go down here.
Okay, so there's a question from Piyush. Oh, are you done, Sahil? Or?
Yeah, what are the other? Small cases are many now. Any way to compare their performance like mutual fund? Great question, Ravi. So on that compare schemes tab, you can also compare selected small cases. So some of the bigger publisher small cases, we have the data in there so that you can compare them. So you can compare Bharosa Club top 150 to a mutual fund. You can compare it to another small case. You can compare two other small cases together. You can compare a small case to a stock. You can do all that kind of analysis in there. So encourage you guys to play around with that.
Okay. So Piyush Goyal says he's been sitting on the fence for investing. How much amount do you suggest? One lot per month as an SIP? Look, Piyush, I think given that you've been sitting on the fence for a long time, I would suggest that you just start with a very small amount and, you know, but get started. And this is not, like Sahil suggested, this is not really the time to rush into equities. We personally think that, you know, the market may go down further, but, you know, that's really your call. But you could easily try putting a little bit of money into either a debt fund or into all-weather investing on small case, and you know, at least learn in the meanwhile. You know, if you try all-weather investing, like I said, you're going to be trying with 2,500 rupees. Don't do an SIP, just do it once and try it out and see, monitor it, see how it works, etc. Karan said that Zerodha, you can open Zerodha via Aadhaar verification instantly. Almost instantly. They have now a 3 or 4 day lag apparently. Can you share a link? Yes, we'll share the link.
I shared the link. So Navroz asked a very good question. So Navrose's question was, doesn't the philosophy of WealthSimple that in the long run it is hard to beat the index somewhat conflict with the thinking behind the small case approach? Navrose, fantastic question. I think you're bang on. It is not easy to beat the index. I've tried to do it again for a vast chunk of my career. It is very, very difficult. And even when you beat it, it's very hard to know if you beat it due to luck or you beat it due to skill, because you may have just been very lucky and had a few sectors go up that you happen to be exposed to. But did you really uh, uh, sort of uncover something that the market didn't? And so, Navrose, I think the advice that I'd have is that WealthSimple is for the investor that is satisfied with a market return and does not want to break their head over trying to beat the index. And that is the right approach, in my opinion, for the vast majority of investors. For the subset of investors that want to actually roll up their sleeves a bit and want to take exposure to certain classes of assets that can outperform the index, that's where Smallcase comes in as a replacement for mutual funds. Because honestly, in our opinion, the expense ratios being what they are in mutual funds, if you're not in a index fund, then in our view, a small case is better. And we do believe that we can beat the index, but that's a belief, and we do not take the onus away from you. If you want to try to beat the index, Smallcase is a good tool for you to do it, but you will need to roll up your sleeves to understand the strategy of the manager. You need to ask questions. You need to make sure you're understanding the stocks they're holding to some degree and say, do you agree with it or not, right? The lion's share of the work is done by them, but you still need to stay involved to do this correctly in our view.
Okay, so Sunil had a problem paying the monthly subscription. The only way to do that is by contacting support@smallcase.com. They're very good with responding to you. And if they're not, please forward that message to us and we'll get it done. Ravi, to answer your question, there are many small cases. How can I compare their performance to mutual funds? We have added 5.
I dealt with that. I dealt with that question.
Yeah, we've added 5 small cases that you can compare. Okay. If there's any other small case that looks like it's a good performer, we will definitely add that too. So far, we've just found 5 that we thought were worth comparing. Understanding volatility. Diksha says, understanding volatility is high nowadays. The stock churning is on higher side.
So I dealt with that question.
Yeah. Is this a completely beaten down market? Is there specific small case you would recommend your customers buying? I think Sahil answered this.
Yeah. So in a short answer, no, because for us to recommend a small case with conviction to our members, we would need to fully understand the strategy of those managers, and we have not spent our time doing that. Instead, we've developed our own strategy, which we would recommend. But again, the basic strategy there is, we want to look at a universe of stocks that consists of large companies. So think of these as the top 150 companies in the Indian economy, and these stocks have the liquidity that allows us to get in and out of the stocks easily. And we want to select amongst those pool of companies, sectors and stocks that we think will outperform given the current environment. So one of the calls we made earlier was to get out of banks, because we thought the COVID situation was a lot worse than the market was expecting. So we got out of NBFCs, we got out of banks, we rotated into DMart, we rotated into consumer plays. That's the kind of style of investing that we are doing. But really, you've got to do your own homework on the small case to figure out the right one for you.
Okay. The next question Ashutosh asks is, are you planning to work on sector analysis similar to stocks and mutual funds? Sanjay, do you want to answer that, or Sahil?
So I think this is a very interesting question. I think one of the features that I would be interested in doing, if it's helpful for the members, is to keep a blog of our thoughts on various things. So it could be a stock, it could be a industry, it could be, you know, a global trend, like, you know, and how we are thinking about it, right? This by no means means we're always right. We're not always right. You know, even the best investor in the world will be wrong, you know, 40% of the time, right? But I think it's helpful to get a dialogue going, and we'd love our members to engage with us on that. So I think, you know, if that's a topic that other members also feel could be useful, we'd love to, you know, publish some views on sectors and in industries, which will give you a flavor of our thinking.
Okay, Sanjay, do you want to take this one? Navroz wants to know, doesn't the philosophy of WealthSimple that...
No, I took that one.
Oh, okay. Ravi is asking, exposure to international fund available?
So I don't believe that Smallcase has any international equity exposure, if that's the question.
I'm not sure.
It's all domestic.
Yeah, yeah. Hemant asks, related to Bharosa Light, how much capital we should keep in reserve to invest in the future? I have a feeling that the market may go down more. So this minimum amount that is required changes on a daily basis. You know, so it's hard to answer this question, but Bharosa Light some time ago was about 70,000 or so. It went to 60, the minimum investment. So it's going to be really hard. You could track it on the Smallcase, like, you know, on the link that we have on our website for the Smallcase.
So Navroz asked a question on, you know, the safety of debt funds, especially in this environment, including the low duration fund. And, you know, we had also noticed that the low duration fund, that entire category had shown some unusual behavior, where it sort of started going down from about 6th March to 27th March. Not much, but it was going down steadily every day. And we did contact ICICI Pru, and they responded that that was just due to supply and demand. There weren't any credit kind of issues. So, you know, someone asked me this question, and if you take a fixed deposit at a top tier bank, and we would say top tier would just be SBI, ICICI and HDFC, then that FD is probably safer than an ultra short low duration fund. But these ultra short low duration funds, again, with people like ICICI, and the reason we chose ICICI was that they have a stellar record in avoiding credit problems like ILFS, THFL, and so on and so forth. So they are reasonably safe because of the low duration. You know, they're kind of all on working capital and things like that. So they're reasonably safe. But if you want a super safe mutual fund, then you can look at overnight funds, which invest in reverse repos and something called TREPs, which you can Google. But they will give you a lower return in there. And the problem with fixed deposits is, one, you're locking up your money, and after taxes, the returns are quite abysmal. So, you know, for most people, I would say that just sticking to your ultra short low duration fund, if you have it, is not a bad idea, because if you exit it, you may have to deal with tax and various other things. So in a nutshell, my feeling, again, I could be wrong, is that they're very safe.
But a good question. And also, just stressing on the FD point, you know, also, if you go the FD route, please be very mindful of the bank that you're taking an FD with, because if things get bad enough where those funds are impacted, then FDs will also be impacted at certain banks. Obviously your HDFC banks of the world, Kotak, these household banks and name brands are very, very, very well protected. But some of the smaller private banks, etc., you should be very wary in this time of just looking at just the headline rate. Make sure you understand the health of the bank.
Amit Jain is asking in this beaten down market, is there any specific small case that you would recommend your customers buying?
So I think we addressed that question. Yeah.
And they're all on the small case tab, the recommendations. So we also encourage you to read the blogs because it's good to understand what you're doing. Naveen cannot hear the sound. I think that's because his speaker might be off, or his speakers might be off. Cannot help. What happens if a subscription to Smallcase is deactivated due to non-payment of monthly fees? How to reactivate?
Anita, some of these I responded privately, so
okay.
Yeah. I think let's look at some of the ones that all the members could benefit from answering, and just answer those, and the rest we'll take up privately. So let's see.
So
for Bharosa Lite is the strategy.
Questions.
Yeah, Diksha, another good question. Is the strategy momentum or value? Great question. In my view, there's no difference. A good fund manager is always going to look for value. You cannot make money in the market unless you're consistently and generate alpha if you're not finding pockets of unrealized value. So that's kind of the philosophy that we have. We use momentum filters. Where our algorithm throws up stocks that we look at and say, is this interesting basis the kind of momentum we're seeing in the stock performance? But it's always evaluated with the lens of, okay, do we think the stock is delivering good value? Anything else question-wise that we want to address?
Question on Rajesh Exports. Why Rajesh Exports in the small case portfolio? Do you want to take that or should I take it?
Why don't you take that? Yeah.
Okay, so Rajesh Exports, it came up in our algorithm as a good stock, and once it does, so we reject certain stocks, like stocks that we rejected were things like Adani Power, Adani Transmission, and so on and so forth. But Rajesh Exports to us was interesting because it's a leader in gold and jewelry exports and things like that. So, like in this downturn, you may say that people will buy less gold and so on and so forth. But it somehow doesn't seem to be beaten down, and maybe it's a play on gold in some way. So I don't know. I mean,
okay, yeah. So I think it's a twofold play. One is the value of the inventory that they're sitting on in a recessionary environment actually improves because gold prices rise. So they're sitting on valuable collateral on the balance sheet, which helps the balance sheet. And secondly, our view is that, and again, this is an opinion, this is not fact. So you can disagree with this. It's not 100% right, all these kind of things. But our view generally right now is that given the shutdown that India's experienced, the government's ability to engage in stimulus is less than some of the richer nations around the world, which will put downward pressure on our currency. And a lot of people think the rupee is vastly overvalued anyway. We think exporters in general could benefit quite a bit from rupee depreciation because their sales will be denominated in foreign currencies. Their costs are going to be in rupees. So their margins could see a benefit. So we think it's a decent positioning for a stock right now. In terms of, someone asked a question of, will you add fundamental analysis? So on a selective basis, yes. My bread and butter when I was investing in public markets was fundamental driven. The challenge when you're doing it with 150 stocks, if you do fundamental analysis on 150 stocks, you will not be able to sleep, eat, breathe. You will be, you won't have enough hours in the day to do proper fundamental analysis. So the way that we envision using fundamental analysis with the fund is on a selective basis. So for example, if we want to play a bank, right? Let's say we think COVID, the signs that things are getting better and we want to start betting on a rebound, right? We may want to take some banking exposure. Which bank do we pick, right? We may selectively look at a sector and say, okay, now let's do a deep dive and understand the differences between an HDFC, a Kotak, and an ICICI, right? To figure out which is the right play to make. But that will be on a more selective basis.
Fundamental analysis, it, like Sahil says, it takes a lot of effort, right? So only if the club grows, our subscribers grow, and so on and so forth, will we, because we may have to hire some people, train them, and all that kind of stuff. And then also, if our small cases like got a fair amount of AUM, not that we charge on AUM, we just charge a flat fee, but then even the companies, if we approach them, will take us seriously, right, and answer some of our questions. So I think it's a little bit of a chicken and egg problem on fundamental analysis.
Okay, so I think
why don't we wrap up? I think this has been a really great session and our first inaugural sort of session with Zoom. I think it's been really awesome to engage with you guys. And we'd really like to make this a regular thing, especially through these times where there's a lot of uncertainty in the market. I think working together to generate better outcomes for all of you and us also, because these questions were great. I mean, just answering these questions, I feel like I've gained a lot. So thank you for the questions. I would love to see more and more feedback from you guys around where you want the club to go to better serve your needs. Please email us at advisory@bharosaclub.com, and please spread the word, because the bigger the club gets, as my dad said, the more we can do for our members. Ultimately, what we really want to do is to negotiate deals with financial service providers for our members. But we can't do that with 200 members. We need 20,000 members. So we think it's possible. You guys just need to pound the table for us. We need to do a great job of serving and adding value for all of you. And we can do something really special. And I think it's the first of its kind in financial services, where we're charging one flat subscription fee and trying to focus on unbiased advice for all of you. And you guys can play a key part of that as early members. So thanks a lot, and look forward to doing more of these. So